Hey everyone, welcome back to the channel. This is part two of our three-part series looking at BMS. Going to first quickly talk through some info I found in the 10K that I think is relevant as we try to project out the revenue, and just a little bit about when looking at a pharmaceutical company, some things that I noticed. So I guess the first thing really is they give us a LOE, it's a loss of exclusivity, for all their drugs. So for all their main brands, they give us when their patents basically expire. And the interesting thing here is for Revlimid, which is their largest revenue, there's some litigation. The patents don't actually expire till 2027, but a volume limited generic is going to be allowed to be released in 2022. So that will definitely impact revenue from that standpoint. And then you can kind of see the rest here. The next thing is they have some interesting data just around the R&D process. According to them, it takes about 14 years to basically create a drug from scratch. And about 2.5 of that is spent in phase 3 or late stage development. And only 1 in about 10,000 molecules will actually become a drug. And they give us the failure rates for small molecule and biologics based off the phase. Pretty interesting stuff. So you could build out a model this way, and I thought about it, but I think it gets a little bit into the weeds pretty quick. And of their R&D costs, most of that is actually spent on late stage phase 3 items. So that's a good sign, I guess. That means their R&D is going towards the important revenue driving things. So hopefully in the near term, they have some more things approved. And then they give us a schedule of their drug pipeline based off phase. So they have 61 drugs in phase 1, 34 in phase 2, 21 in phase 3, and then they currently have 22 approved drugs. So kind of if we were to extrapolate based off this, right, 80% of these phase 2 are going to fail. So about 6 of these will move on to phase 3, right? Phase 1, 92% of these are going to fail. So you can see how the funnel gets smaller pretty quickly, and about 30% of these will fail. So really, they probably have a pipeline of probably close to, 15, 20 drugs if you were to do the math in the coming years. So interesting look at Celgene revenue for this year was 15.7 billion. This is important, and we'll talk about it when we look at their income statement. And then recently they acquired Myocardia, pre-revenue company for the most part, I believe, but they have a drug, mavacamten. So in the 10K, they said they're expecting an NDA submission in Q1. FDA has accepted that with the date of 1/28/22. So that drug should launch early next year. And then they give us brand sales. So the sales based off drug, and pretty interesting stuff. And what you'll notice here for a handful of these, if we look at, and they give it between US and non-US. So for like Revlimid, right, we're going from 900 million to 8 billion. What that is that's from the Celgene acquisition that closed late 2019. So you'd have a full year revenue there. So it's actually a pretty mature drug already. And you'll see the full year reflected here. Same thing with Pomalyst, and a similar thing with Abraxane, and I think in Rebic as well. So you'll see a few of those. But anyways, we'll hop on over to our income statement, and we can actually ignore this bottom part for now. So when we're over here on the income statement, we'll notice if you look at sales, right, slow growth really, and then in 2019 you see a pretty material jump, and that's from the little bit of Celgene revenue that's reported in 2019. So the Celgene acquisition, they paid $72 billion for Celgene, so pretty big acquisition. And then in 2020, you get the full year of Celgene revenue, and we know it's 15.7. So if you back that out, you can see right there, just kind of slow and steady growth, kind of excluding acquisitions. So that really gets us the net product sales, and then they have this other alliance and other revenue, which we'll pull in the final DCF, but pretty small dollar, nothing huge here. Hovers around billion, billion five. So let's move over to our revenue projections, and I took two approaches. I think this was tough and a little bit daunting to kind of try to tackle, but I've built out a model. You could come in here and tweak the assumptions if you know more about any of these drugs. But the first one is a brand level forecast split between brand sales in the US and then the non-US. And then I added a line for their new drug based off their recent acquisition, mavacamten, which is coming from the Myocardia acquisition that they paid 13 billion for, which I think I have a note in here somewhere on. Anyways, what I've done is by drug, you'll see here this LOE. So that's when they lose exclusivity for the drugs. So the interesting thing about Revlimid is they don't fully lose exclusive rights in 2022. There's limited generic sales that will come into the market. So my guess is they're going to start to see sales decline here. And then in 2027, the patent expires and just kind of goes off patent. So what you'll see is all these gray cells are actually linked up to this yellow. So this is how much sales are going to be reduced once everything expires. Now 2% is obviously way too low for these individual lines. And this is where I ran into trouble with the model is you would have to model in kind of future revenues for more drugs than just the one I've added here. And that's kind of tough with the pipeline. You never really know what's going to happen. So I've tweaked this reduction to kind of say like, okay, I've kind of tweaked it in a sense to look at total revenue and see it kind of still slow, steady growth and then kind of slowly revert back down. And this is kind of the problem I had with the model is I think to really build out a brand level revenue schedule, you're going to have to layer in placeholders or, base assumptions for a lot of new drug development. And, it's hard to parse out the data, but right, how often do they actually launch a new drug? I'm sure you could go back and look at enough 10Ks and 10Qs to figure that out. But, we can kind of see here these three business units all kind of fall off and we've seen a few more pop on, but these are mostly acquisition related. So hard to say, but really kind of came in and just made kind of generic assumptions, I'd say, on a lot of these drugs of how growth is going to happen in the next few years and how things are going to kind of pick up here. And, at this level, I think that this is a daunting task. I don't know if it's a very accurate forecast or assumption, but you see sales going from 42 billion to 50 billion. And, if we exclude, if we look at like 2020 and we exclude Celgene acquisition, right, you're back down to 25 billion in sales. You've grown about 5.5 in 5 years, right? This has us growing, 9 billion roughly over 10 years. So a little bit slower rate of growth than we saw in these 2 years. So, I think it's probably a decent assumption, but I think I quickly got in over my head trying to do it at the brand level. As I started to pull together, I was like, because right, realistically, when you lose exclusivity, if we look at some of these other drugs, right, like they're declining 10, 15%. And if you drop like a negative 10 in here, the problem that we see here, right, is like sales are lower in 10 years, but we know that that's not really the case because they're going to acquire new drugs, something of that nature to kind of replace this pipeline, and they're always going to have kind of high R&D costs. So I think you have to set this kind of exceptionally low, right, 1% or, even at zero and kind of say, look, okay, we're going to grow at the same pace. And basically what we would be saying is any revenue they're going to lose, they're going to replace it with something else and kind of maintain that slow growth. So this was kind of model one. I wasn't super happy with it. I felt like it's an incomplete model because of that piece. So the second approach I took, and honestly, I think this might be a better approach, is to take a super high level picture. And we'll refine it real quick, but just US and non-US revenue, look at how it's grown historically. We know if we back out Celgene, right, this is closer to 25, and we know if we back out Celgene here, you'd probably back out, what is it? Or sorry, in 2019, you'd back out, let's see, back out about 2 billion from that, right? So 1.85, so let's do plus this minus 1850, and then plus this minus 15.7. Right, so on ex Celgene basis, the revenue's not really growing that impressively. Right, it's just kind of slow and steady, chugging along, 7 to 8% a year. Now the question is, with the acquisition of Celgene, right, we see large spikes in 19 and 20, but obviously this is just from the ramp up of these revenue pieces being added in. Can they continue on kind of this historical 7, 8, 9, 10% growth going forward, including the Celgene revenue stream? And I think that's the hard part. Right, a big piece of this is Revlimid. We know there's litigation, and we know that this is probably going to decline. The question is, how fast is it going to decline? And that's the hard part to say. So, maybe they don't grow at this continued 7, 8, 9, 10%. Maybe they drop down to like a 5, 6, 7 range. And if that's the case, right, easy enough. This is set to an average right now of those three, but we could very easily just set it to like 2018 levels, maybe even 2017 levels to get kind of that better mix, right? And then just kind of have it slowly reduce down. I think that this is probably as good, if not better, of a prediction than looking at the super detailed view. And I think, obviously, if you're going to make an investment in BMS, you need to really understand all these drugs, the competition in the space. Like, does Revlimid have big competitors in that space that are just like waiting to go? Is the generic going to really catch on? How competitive is it? How's the litigation panning out? Right? All of that stuff is super important to understand. And is this going to basically go to zero overnight in 2022, or is it actually going to maintain? Because right now this makes up, um, right, what, eight over 25% of the revenue. So I think that's a big question. But you could take the conservative approach and go something like this, and you go from about 42 billion to 63 billion. So I think that shows kind of that continued mid-single, low single-digit growth that they've kind of experienced historically, and now that the revenue base is twice as big as it was 5 years ago, expect a little bit slower growth. And I think that that's probably a fair assumption as well. So I don't know. This one was definitely challenging. I don't really know what I was expecting. I used to work in life sciences, but we didn't have drugs. We were more of a life science company that provided supplies and different things of that nature. So this was definitely a little bit different because once the patent expires, your products are done. Whereas if you're manufacturing like an actual product like our company was, it wasn't as heavily reliant on patents. But definitely interesting to see. And I think, we'll pull together the final DCF kind of based off a couple different views here and see um, what kind of valuation we get. And then definitely feel free to download this. And if you know more about these drugs, right, this is set up now where you can just input how these drugs are going to perform. You could add in a couple extra rows for new drugs here, and model out how you think their revenue is going to look. So I think it still sets it up well. It's just kind of tweaking those assumptions to really make sure you have a good idea. So thanks for tuning in. Let me know if you have any questions or comments, and I'll get back to you. Thanks.